Hello, everyone, and welcome to our weekend update here on March 11th, 2023. So, as you likely know, we had some heat that came in, some downside heat that came into the market this week. Last weekend, we were in this general range, and I told you this was a likely area that we could see a reversal. And, I was expecting that the market could have gone a little higher, maybe up to 4150, and but maybe not, and that we get a reversal right out of here. I was expecting the reversal to potentially come down and touch this downtrend line. That was one of my projected resistance areas. Then the next one would have been a little lower than that, probably right in this 3875 or so area. We also popped through that, went down here to the 3850 range, 3860. Going into the close, we did rebound just a little bit off of that, but you see we had some pretty high down volume here. So that is an indication that the sellers are serious. They were overwhelming the buyers, which of course is what's going to drive prices lower. So, what to expect going forward? Well, the news is pretty negative. The bank, or couple banks that failed, obviously sends fears out to people. We had this, of course, in 2008, 2009. It was much broader than it appears to be at this point. But there's going to be a lot more that'll probably get uncovered on these things. So we certainly need to keep that in the back of our mind here. So right now, without any additional what I'd call nasty or downside news, I would expect a rebound happening somewhere in this 3850 to 3800 range, and possibly a rebound back up into around this 4000 range. So again, I don't like to say anything definite. Nobody should say anything definite, because we don't know. But if I were to put odds on this, I'm thinking that Monday maybe could be a little bit more down continuation, possibly with a reversal later in the day. And sometime by middle to end of next week, we might be back up in this 3950 range. I'm guessing there's about a 60% probability of that occurring. And then 40% that we could continue on down through this. So anyhow, that's just kind of where I've placed the odds from my own particular opinions. So let's take a quick look and see kind of where we're at. So all of our class trades, now this is specifically for the index option alert service. This is from December 1st. And these are our list of trades that we have closed out. So this is all of our closed trades here. And this is what the equity curve on those closed trades look like. So we had a really nice run. And then we had a couple that we took out here that were some losses, which is normal and to be expected. We're not going to nail every trade. But that's kind of where we're at right now. Now, in addition to these, we of course have some open trades still out there. So let's just take a look at our current open trades. We have three. And again, we came into this whole thing on Friday light by design. We wanted to be able to take advantage of certain things if they happen. And we did float some orders out there, but they did not end up getting filled. So this particular trade here, during the week, we dropped this right wing and we flattened this out. So this thing now is pretty much delta neutral. We're going to look for possibly a rebound in our market and this thing to decay a little bit. We did have about $200 in profit in this. So, a case could be made that we should have closed that when we were up 15, 16, 17%. We did have an order floating out there. It just never got hit. This particular one, our butterfly with a long call. So if we did not have the long call in the mix, this would have been the butterfly itself is a negative delta trade. So right now, if we were to look at the overall P&L that's occurring in this trade, we would see that the butterfly is up a little bit in money. That long call is down in money, and that's what puts us at this current situation. So we do have an order out there to essentially sell just the butterfly part of this trade at its slight profit. If we get that, then of course we will be down a little money in this long call, but then we can decide, okay, do we want to add another butterfly in? Maybe at wherever the market is trading then, or maybe we put in a broken wing butterfly that doesn't have any upside risk to it and sell off the long call. That might be another possibility. So we'll look at a couple of those things this week after we get a better sense of what's happened. One thing I do want you to notice, though, is how relatively forgiving these trades are. So those were some really big market moves. Not quite COVID size market moves, but they were big market moves. And you can see, yeah, this butterfly took a little bit of heat. Yeah, this one took a little bit of heat too. But just imagine if this was a put vertical spread, a put credit spread. I mean, you'd be in a lot of pain on something like that. Or even if you just did a straddle or a strangle, and didn't have risk defined, you could be in a lot of pain on these. So again, the butterfly is a very forgiving trade. These are down money because volatility is up. Volatility was up 4 to 5 points, which is 25% or so increase in volatility. So that's a pretty big move up in volatility. And that's the one thing that does negatively impact butterflies. So in these two butterflies here, even if the price stayed about where they are right now, but over a couple days, the volatility came back out of the market, you would see the T0 lines rising up here to where you'd have some profit coming in on both of these trades, even where the market is right now, even the fact that they're not in the tents. So then we get to this one. Now, this is a totally different animal. It is a time spread. These are calendars. Now, this one's positioned pretty well here right now. Yes, it's down also because of a volatility expansion. Now, I'm going to pop this one open. And again, at some point, we will get into a detailed deep dive class specifically on time spreads, on calendars, on diagonals. But what I want you to kind of look at here right now, and see how this thing changes. So a calendar spread, the tent changes all the time based on volatility. And of course, our market is closed right now, so it's even going to act weirder yet. But what we need to have happen in these, what we're looking to have happen, let me just wipe out the planned adjustments here. So we currently have $24 in profit in this short call. So that's this tent all the way up here. That's the short call and then the long call. But we've lost $25.80 in the long call value there. So we're down a dollar, whatever that is, $1.60, $1.70 per. And of course, we've got 5 of them. So we're losing on that right now. These things only have a value of 78 cents. So one of the things that you can potentially consider doing is on Monday, that's going to drop even further. Maybe you buy 1 or 2 of these things back, and then we look at our proposed trade. You can see if we do get a quick, fast bounce or reversal, that could work in our favor. And it's only costing us 78 cents to consider taking one of those off. On Monday, that'll likely be less yet. So that may be something we do as we get closer to expiration. Ideally, we want to get these things closed out by Wednesday, Thursday at the latest. You do not want to be battling these things going into expiration on Friday. Now we can look here and we can see that on our center one that's centered at 39.70 right here. So this one, we are down $83, but we've gained $83 on this side. So that center one is essentially neutral. That really hasn't hurt us or helped us at this point. This lower one, we actually have a little bit of profit in because these are up $11 in P&L here. We're down 1070 here. So we're up a slight amount on this particular one here. So that's the complexion of what's happening on these three. Now, what we really need to have happen, though, is, let me change this from delta to extrinsic value. So what we really need to have happen here is we need to have the extrinsic value drop out of this one faster than it drops out of this one. Now, your longer dated options will always have a little more extrinsic value into them because there's more time that has to elapse before that becomes worthless. So really, we're looking for this to decay a little faster than this, and we're hoping that does in fact happen. You can see up here there's virtually no extrinsic value left in either of these, so that's not going to help us a great deal. We have a negative extrinsic value here. That's a little odd to me. I think that's just because we're after hours in the market, so that may also be impacting these P&Ls here a little bit. So we'll take a look at that during market hours and see what that looks like. But there shouldn't be a negative extrinsic value. It can go to zero for sure. But anyhow, so that's kind of what's happening on this. So where this thing is setting right now, again, I'm not unhappy with it if it were to decay in place here. My concern is that we're going to have to carry it closer to expiration than I would like because of the way volatility increased this particular week. So we'll just have to see on that one. Probably by Tuesday, we should have a pretty good sense of what we're going to have to do on that one. So I'm going to pause right now and I'm going to pull up the same information for small ball. Of course, the overall market complexion doesn't really change, but we do have different positions in our small ball service. So let me just pause here a second. I'll pull that information up. Here are the results of our small ball trades. I just noticed too that I didn't filter this out to be closed trades only. So our open trades show here, but they all show at a zero value because of course they could be anywhere by the time they are closed. So when we look at the equity curve, you can see it's got a really nice equity curve. Then it gets really flat up here. Well, it's getting really flat because it's showing those 4 open trades that are at a zero. So they haven't impacted this P&L curve one way or the other yet. So at the end of the day, we've had a nice run in the small ball service as well. We have had a couple hiccups there, some slight losses. And, one of the things that I did notice with small ball, which it's been a long time since I've traded positions that relatively small. And one of the things I am noticing that is making me kind of rethink the whole process here a little bit is that the amount of commissions that are getting eaten up in some of these trades is just astronomical compared to the amount of P&L that is available. For example, this particular one here on TLT, we had an iron condor, I believe it was 10 legs. I mean, an iron condor is going to have 4 legs. It was 10 iron condors. So that's a total of 40 legs. So if you're paying $1 in commissions, that's $40 to open that trade and then $40 to close it. Now, most people aren't going to be paying $1 in commissions. You're probably paying, hopefully, somewhere in the 60-cent range or so. But still, that's a lot of money in opening and closing and, God forbid, having to adjust that trade. And so this particular trade, we actually were down $38 roughly in this trade. But when we factored in all the commissions, it put us down $100. Likewise, on some of these others, I mean, if we're trading 5, 6, 7 of these and we're opening and closing, 5 butterflies with 3 legs, that's taken a massive chunk of our P&L. So while it is okay to potentially learn to trade positions using these smaller positions like this, I think it is a little bit of a, I don't know, I hesitate to use the word fool's errand, but it's a little bit problematic to attempt to think that you're going to ever get halfway decent returns out of trades like this when commissions are such a factor. So here are the 4 positions that we do have open right now. Here we just opened this one on Friday. So this is a butterfly with a long call. And this is in SPY. If we do get a rip up in our market here, that long call is really going to gain in value. And we'll have to do something with that fairly quickly because over time, this long call is going to decay and it's going to dip down into this valley here. So this is a trade that we put on when we think we might get kind of a hard, fast pop. And if you, again, take a look at our chart is, in my opinion, leading toward that possibility. It would not be, out of the realm of normal market movement to, after a few days of sell off, to get one of these days in there or one of these days in there. Those, after you get a couple of these sell offs, again, you oftentimes will get what people often refer to as a dead cat bounce. And I'm a cat lover. I got cats, so I'm not trying to offend cat lovers there. But anyhow, that's what they call it. So that's what this can take advantage of. This one, it's held up okay. It's gotten a little bit depressed. Under normal circumstances, this would have decayed a little further. We'd have a little more profit in this. But the volatility that's happened over the past few days has depressed this T0 line. So if volatility subsides a little bit, if we get a little bit of stabilization in the markets, we'll see some profitability creep back into this rather quickly. And it's a nice, pretty wide condor here. So we do have a fair amount of room that we can work with. I'm going to circle back to this one in a minute. So this one was DIA. If you remember, when we put it on, it was a broken wing condor. So this leg was all the way up here. As the markets continue to sell off harder and harder, our adjustment is to drop this wing, and then that raises this side. So it takes off a little risk over here. It brings a little more profitability or potential for profitability into the trade. So now we're going to look for the market to hopefully decay in this range here a little bit. And over the next, maybe 4 or 5 days, maybe next week sometime, we should be able to pull this off at a halfway decent profit. Now, this one, XLF, so this also broken wing condor we had entered. The market was all the way up in here when we had entered. I say all the way. Again, this is a lower priced ETF, so it was $37 or so. Now you can see it's all the way down to 33. That is a massive move in an ETF. These ETFs do not normally move that way. In fact, let's just pull open XLF here, take a quick look. And of course, XLF is one of the financial sector ETFs. And of course, we had some really nasty news in the financials with some with some sizable banks failing and people not really knowing how many more banks might fail. So that gave us this pretty massive sell-off where we came from about $36 all the way down to $32.50. So that, in something like this, that is a very large move. And I sent out a message on this on, I want to say it was Thursday, about some possible things you could do. The most likely one, because even dropping this leg right now didn't really have any impact. And the reason it doesn't is we're so close to expiration. There's just not enough juice left in options that are that far away from the money to really have an impact on us. So your options were to just try to close this thing out, get what money you could for it, and know that you were going to take a loss on it. Or in my case, I said, well, I know I've got like another $50 of downside risk here, but if we were to get a sizable bounce, and please understand, I think that's unlikely, not out of the realm of possibility, but unlikely. Again, if I'm applying probabilities to that, I would say the likelihood that we would bounce from this 33, up to 34, 35, probably less than 10%. So I've kind of resigned myself to where, yeah, I'm probably going to be taking close to a max loss, if not max loss on this. But I do have a chance for a dead cat bounce through the week this week. So I'm just going to leave this one open myself and see if that happens. We will, if we do start to get any movement up, we will float a GTC order, a good till cancel order out there on this that will trigger, hopefully, when certain conditions are met, such as maybe creeping back to a little bit of profit or at least a greatly reduced loss. So that is our current small ball positions that we have open. So that should give you the full wrap up for this weekend. And again, all in all, with the market moves that we had, I think our positions have held up pretty darn well. So And if we get a reduction in volatility here in the early half of this week, even if we don't get a market movement up, if we get just a reduction in volatility, some of these are going to come back into either levels of profit in the case of a couple of these, higher profits here, higher profits here, higher profits here, great loss reduction here if we get that upward movement. This one, decay is only going to hurt us on this one because of where we're positioned. So if anyone has any questions, of course, feel free to post them in the forums. Otherwise, thank you for taking a look at the weekend update.